Good morning, everyone. Give just a few seconds for everybody to get in. Hello. Everybody's having a fantastic Tuesday morning so far. It is Tuesday. It is May the 5th. It is Cinco de Mayo, and it is Julia's birthday. Cinco de Mayo happening on a Taco Tuesday. Coincidence? I think not. So good morning. We're very, very excited to have everybody with us this morning. Welcome, family. And we're going to get started. You know the drill. Chatting in our questions. If you're joining us on YouTube Live, you'll chat your questions in as well. Julia will make sure those come over to the Zoom chat for our speaker to be able to address. And if you are joining us after the fact, please go to auxiliary.uga.edu. Click on the Auxiliary Connections tab and then the survey and feedback. You can leave us your comments, your questions, your feedback, what we're doing good. We're 6 weeks into it now, so you should have let us know by now if we were really messing something up. Just saying. So let us know what we're doing well, doing that we could improve on, all of those fun things. So we're again very glad to have everybody with us. I'm going to turn it over to Randolph to introduce our speaker.
Good morning, auxiliary family. So we're talking financial wellness and literacy today. I'm joined by my high schooler, 16-year-old Raina. Say hi, Raina. She looks much better than Tortilla Man, I have to say. So I think it's a nice upgrade from Tortilla Man. I am really excited to welcome back and actually officially welcome for the first time to auxiliary services, our own former Bulldog and one Bulldog, always a Bulldog, Ken Chrzanowski. Now, I met Ken about 6 years ago when my wife dragged me to a credit awareness and credit building class that Ken did. And I sat there grudgingly and watched her take some notes. And believe it or not, we put the principles and processes he talked about in place, and our credit scores shot up. I mean, just a phenomenal amount of points just by putting in place. So I was really excited when when we asked him to come and do a financial wellness class, and he was very to that. I will say, Georgia United Credit Union has been a great partner of the university. Ken has done for many, many years work with our training and development unit. I know Georgia United Credit Union is one of the big sponsors for our Martin Luther King Freedom Breakfast that happens every January. So this is just one of the great partners that we have. Auxiliary family, I want you to be aware of that. And without much more ado, Ken, we're going to turn things over to you. Welcome.
Well, thank you, Randolph. I certainly appreciate it. First of all, I want to say thank you for all you do for the University of Georgia. As Randolph said, I'm an alum. As we were talking earlier, it is in a different century. When I was there as a student, I was actually a graduate resident in the housing office. I was stationed in Russell Hall back when Russell Hall was nothing but 975 18-year-old boys. So that was interesting and fun. I still have some flashbacks about that. But it's always good to come back and help my university. I want to tell you a little bit about Georgia United and myself before we begin. Many of you may not be aware that Georgia United is the credit union for the University of Georgia. Georgia United merged with the UGA Credit Union, who was under the auspices of Tom Cochran in 2004. So we've been an integral part of the UGA family since that time. We sponsor many groups and individuals on campus, and I'm willing always to speak to anyone and everyone throughout campus, any group, any college, any individuals who need our services. That's what we're here for. Myself, I have about 11 years of credit union experience in financial services. I like to say that what I'm going to be presenting to you is purely educational. It's not a timeshare presentation. It is purely educational because I'm actually a retired high school teacher. I taught for many years in the Gwinnett County Public Schools. I'm a former Teacher of the Year. And about 11 years ago, I was brought into the credit union field to help teach financial education to those people that the credit unions serve. The other point I'd like to make is everything I'm teaching to you today, I had to personally learn myself, because no one ever taught me financial education. No one ever taught me financial literacy. And this is one of the most important things that we can learn throughout our lifetime. Over the course of our lifetimes, the decisions we make can save us tens of thousands, if not over $100,000 of our own money. So what I'm going to do today is try and teach you some of the things that you can be doing now in this time to help you make yourself financially stronger as you move forward. I also want to share with you, make sure I can do this, my personal email address, as you see it on the screen. Email me anytime, any question. I have people emailing me 2 and 3 years after they've been in one of my sessions saying, Ken, we are at your session about buying a car. How do we make this happen? How, the process. Tell me about the best ways to do things so we don't get taken advantage of. I'm always happy to help in any way I can. So if you want to reach out to me, please feel free and know that it's completely free. If I don't know the answer to a question you're asking, I work in an office with really smart individuals in areas that I know little about and can get an answer for you very quickly. So know that you have someone here who's just willing to help. So one of the things we're going to do today is we're going to talk about setting financial priorities. We're going to talk about conversations with creditors. We're going to talk about protecting your credit score. We're also going to be talking about the importance of tracking your spending. Especially in this time, tracking your spending can be one of those things that can really help keep you on the straight and narrow as you're moving forward. Right? So what should be your financial priorities at this time? This right here are those things that you should make priorities. You should prioritize your food, your housing, your transportation, your utilities, and then finally your unsecured debt and your credit cards. Those are basically Maslow's hierarchy of needs for financial wellness. So those are the things that you need to make a priority. Start at the top, work your way down. If you find yourself getting toward the bottom and having difficulties, I will tell you and give you some tips on reaching out to those creditors and things that you have to pay and how to have those conversations. So you need to set some short-term financial goals at this moment. They're called SMART goals. Short-term goals are specific, measurable, attainable, relevant, and time-bound. So what I'd like you to do, and I'm going to talk to you about tracking your spending more, is I want you to take a notepad today at some point, and I want you to make a little T at the top. And on one side, I want you to list your expenses. Go back over your previous month. And what I want you to do is I want you to list out everything you've paid, all your bills, all your gas, all your groceries, and I want you to list everything out and come up with a final number of expenditures. And then I want you to list on the other side your income, whether it's just salary or gig employment or anything that you might have, list your income. And then what's going to happen is you're going to either be a plus, a neutral, or you're going to be in a deficit. And so that way you'll know on a monthly basis where you stand last month, because you need to be aware of whether you're draining, going over budget, you're neutral, or you have a surplus. So please track your spending. As you move forward from this point, and as things return to somewhat of a more near normal, you need to start setting intermediate and long-term goals. Now, intermediate can be anything from 1 to 3 year goals. Long-term are over 3 year goals as well. While you may not need a car today, you may think, gee, I may need a car 3 to 5 years from now. What can I do to prepare myself, prepare my credit to be in a better position to buy it by then? So that's the importance of goal setting. Goal setting is one of those things I always like to say, it's a little angel on your shoulder, because a lot of times we forget what our goals are. And then either we're at the grocery store or we see something on Amazon, or when we can go back to the malls and they're just starting to open, you'll see something and you forget about your goals and you see something and you purchase something. And then almost immediately you have that feeling in the pit of your stomach where you think, gee, I'm not quite sure if I should have done that. That buyer's remorse. Why do you have buyer's remorse? Because the emotion of the moment overruled the little angel on your shoulder of, does this work with my budget? How does this work? So that's the importance of goal setting. Setting goals and having it is very super important. I think it's also one of those things that as you move forward can help keep you on the rails. I like to tell the story that 8 years ago, financially, many of the things that I'm teaching you, I had to put into place. It wasn't easy. It was one of those things that I had to really discipline myself. But here's the thing. I still was able to go on vacations. I still was able to put my children through college. I still was able to get cars and move into a new home. But the point is I had spending leaks in my budgets that I had to address. And by doing the things I'm going to be talking to you about today, it's going to help you put yourself on a better financial term. And just understand this. Right now, there's a lot of uncertainty. There's financial uncertainty. There's medical uncertainty. There's a lot of other uncertainties that help build in the nexus. So if we can just take that financial insecurity or feeling and wrap ourselves a little bit about it and put us on a path, that will help you feel a little more stable in these times. So as I was talking about tracking your spending, one of the things you can do right now is if you find that you're in a deficit and maybe you're getting toward the end of the month and you're not quite sure whether you're going to have enough to pay your bills, you can contact your creditors to try and work out a payment plan. Another thing you can do is you can contact current creditors and try and renegotiate your terms. It's one of the things that I encourage people to do every so often. Oftentimes we get credit cards or car insurance or even our bank accounts, and we have them for a long time and we don't ever change them. Why? Well, here's the deal. Because it's difficult, or we perceive it's difficult, because it's going to take time. Here's the thing. Many of us have time right now. We can look at the credit card we had for 10 or 20 years that's maybe charging us 15% interest, and we can do some research and maybe find a credit card that has a 0% balance transfer offer. And so if we have a balance, we can move it over and save ourselves money. Or we can find another credit card that will offer us an interest rate that's below 15% interest. And we can negotiate between the creditors for your business. It's your business. You need to take control of that. So here's what I want you to do. And I'll come back to the slide in a minute. If you're interested in changing a credit card, on the screen there's a website called creditcardtuneup.com. Okay? This is endorsed by Clark Howard, the consumer guru out of Atlanta. It is owned by no financial institution. You can toggle for best miles, best cashback, best 0% balance transfers, best interest rates, and it will show you the best in class throughout the country. It's also important to note, and why that's important is even something like NerdWallet, while they have fundamentally valuable information, NerdWallet has business relationships with 8 banks and 12 insurance companies. So obviously, they receive profit by pushing certain banks and credit auto insurance to you. And once you sign up through those links on NerdWallet, NerdWallet has a financial interest in it. CreditCardTuneUp.com has no financial interest in you other than to get you the best rates. Share that with any of your friends. This is the best in class. So in Credit Card Tune-Up, let me talk a little bit about that if you're going to renegotiate your credit cards. It's going to have best interest rates. So as I said, if you have a 15% interest rate at your current creditor, and then there's one that's offering you 12%, here's the deal. If you don't want to, you can always go back to your current credit card and say, hey, I have this offer from blank financial institution. They are offering me 12%. Will you match 12%? And if not, then I'm going to take my business elsewhere. Now, you have to be prepared to move if you do that. But oftentimes, the current financial institution will say, we don't want to lose you as a customer, so we're going to bump your interest rate down to 12%. That is how you have the power right now. That is how you can take that advantage of this to renegotiate your credit card rates. Another popular thing on this site is 0% balance transfers. You can take all of your current balances on all your different cards, wrap them under one through one balance transfer offer where you're going to pay 0% balance transfer. Now, how does that work? Let's say you have various credit cards with $10,000 of accumulated balance. You find a 0% balance transfer offer. You contact that company and you move all of your balances over to the 0% balance transfer, which means for the life of the balance transfer, usually it's 12 or 18 months, you will pay 0% interest. Now, here's the caveat. When you go for 0% balance transfer offers, ideally, you want to have no balance transfer fee. That is best. Some places might have a 3% balance transfer fee, which means if you move over $10,000, there will be an accumulated fee of $300. So when you start paying on it, your balance will be $10,300. And that's okay, 3% is okay. But what you don't want to have is you don't want to go to a 0% balance transfer that offers a 5% balance transfer fee. Why? Because 10,000 moved over, that means your balance to start is $10,500. So you can either have a balance transfer with 0% no fee at starting at 10, 3% at 10.3, 5% at 10,500. So look at the fee that they're going to charge you to come on board. If you have any questions, please email me about that. All right. Going back to the previous slide, one of the things I also want to talk to you about is renegotiating your auto insurance rates. Now, some of the auto insurance carriers are giving us rebates because we're driving a lot less. That's great. The other thing you can do, go into your auto insurance policy and change your annual mileage. How does that work? Well, you go into your details. So every year when you do your emissions, they take your VIN number, you pass emissions, they also take the mileage, and then that goes to the state DOV. The state DOV then gives that to your insurance company, who then says, hey, last year you drove 18,000 miles. Based on your mileage, this is how much we're going to charge you for insurance. Well, because of the last several months, you're going to be losing 2, 3, maybe even 4 months of mileage. So your mileage could be up to 33% less than it was the previous year. I've already gone into my carrier, changed the mileage, and dropped it down by about 1/3, based on the fact that I'm just not driving anymore. I'm not driving to the office. I'm not driving to meet our partner companies throughout the state of Georgia. So that is a way you can help save money in this time, right? Aside from what the insurance companies are doing, go in and change your mileage. Finally, if you have TV service, if you have cable, now's a great time to try and renegotiate your rate. Call them up. Just like in the recession of 2008 and 2009, call them up and say, there's all these streaming services that I could sign up for at that $50 a month, and you're charging me $99 a month. Either we need to bring this price down or I'm going to move. Now, some people I know, connectivity is an issue because maybe they live in a rural setting, but here's the thing. The cable company doesn't need to know that. What you need to do is you need to talk to them and say, hey, I could go to YouTube TV for $50 a month and get 83 channels. Or I can just go Sling TV from anywhere from $25 a month up to $50 a month. That is one way you can save money right now. Renegotiate your cable bills, your auto insurance, and your credit card rates. So that is something you can do during this time. Another thing you can do right now, order your credit reports. Look at your credit reports. There was an announcement last week that for the next year, you are eligible to receive your credit report every week for the next 52 weeks. Why? Because there are fluctuations in your credit report based on your current bill paying and your current debt load. So you are eligible from all three credit reporting agencies listed on the screen, Experian, Equifax, and TransUnion, every week. If you want to do it every week, do it on Monday morning, have it sent to you. What you want to verify? You want to verify your name. You want to verify your address. You want to verify your social security number. That is your personal information. Why? Because if you need credit now or in the future, if you need credit, if anything is wrong in that personal information box, a financial institution cannot lend to you until that information is corrected. Now, yes, it can be corrected, but it usually takes 30 to 60 days where you have to contact Experian, Equifax, and TransUnion individually. They have to research it, and then they will fix the mistake. But if you need credit now, or if you need to buy a car now, or you need to refinance your home now, that is going to torpedo that, because any financial institution will not be able to lend to you or do anything for you until that personal information is fixed. That's why you need to check that. The other reason you need to check it right now is you need to check your creditors. It's called trade lines, and it lists American Express, your mortgage, your car loans, everything that you've had credit throughout your lifetime is going to be listed. Verify that the creditors listed are correct, and verify. Now, understand that it's probably going to be a little behind on your bill paying, so if you paid a bill, it's not going to have quite the current balance that you might have on it. If you have a balance, just verify that all the creditors are correct. Why? Because if you discover that you have a credit card on a financial institution, let's say a Discover card, and you've never had a Discover credit card, that is a red flag that someone has just stolen your identity or has stolen your identity in the past. That's the point where you have to then contact Experian, Equifax, and TransUnion, put a fraud alert on your account, and get that taken off through a dispute in the 30 to 60-day window. It's in difficult financial times, as we all know, people try to take advantage of people by stealing identities. Why? Because they're hurting financially. Scams, pandemic scams, a lot of different places where they put things out there and try and get you to click on links and through the internet. And so this is why we need to keep track of our credit reports on a weekly basis for the next year. If you can't do it every week, try and do it every other week. Usually, like I say, it's twice a year, and eventually it will go back there. I always like to do it on New Year's Day and the 4th of July. Why? Because I can remember that. The other place I tend to do it is either on your birthday and your half birthday. Why? Because I can remember that as well. Other places you can go, creditkarma.com and savvymoney.com. I like both of these because A, they're free, and I have accounts with each of these. And what happens in creditkarma.com is that if any credit is trying to be opened in my name, Credit Karma alerts me. In the previous month before all this happened, I bought a car and also refinanced my house. And each time I received an email from Credit Karma and Savvy Money that said, hey, have you opened new accounts? And it gives you a head up just to know that, hey, did I do this, or is someone doing this in my name? And it's completely free. Now, one thing I'd like to tell you about both of these sites is that they will give you a credit score. I want you to understand that these credit scores are approximate. They are not your actual credit scores as used by Experian, Equifax, and TransUnion. Why? Because Credit Karma and Savvy Money cannot legally have the exact algorithm that is used in the financial services sector by those three credit reporting agencies. They have something close. So here's the deal. If you see that you have a Credit Karma or Savvy Money score of 725, it will be in the ballpark. It may be 732, it may be 718. It's somewhere close. It's not going to be 630 or 800. So it's going to be kind of close to the ballpark, but what happens is people tend to take the Credit Karma and Savvy Money scores as legitimate, and then when they get into a financial institution, They're a little miffed at the fact that it's not exactly what the credit reporting agencies, Experian, Equifax, and TransUnion are showing. Just understand that, okay? That's very important, but they are great services. The other great thing about both of these is that they give you your current scores in each of the 5 components of your credit score. It's a great way to track how you're doing. It's a great way to set goals because there are 5 components of your credit score. 1, payment history. Do you pay your bills on time? It's important to pay your bills on time. And going back to your expenses and income, if you find you are in a deficit now, months from now, years from now, here's the important thing. You need to contact your creditors, your financial institutions, and let them know what's going on and work out a payment plan with them. Because if you just don't pay them, all the financial institution knows is that you don't pay them, and then you get reported to the credit agencies as being 30 days late. And you don't want that. Why? Because if you are about 21 days after your due date, now don't freak out if you pay a bill 2 or 3 days late, okay? You're not gonna get reported, you're on vacation or you forgot or whatever. Here's the deal. About 3 weeks after a bill is due, financial institutions kind of surmise that you're not gonna pay them. So they send your delinquency to the credit reporting agency. The credit reporting agency then lists you as they process it as being 30 days late. Well, why is that important? If you are noted as being 30 days late, that has an incredible negative impact on your credit score. One time, 30 days late can drop your credit score between 60 and 80 points. And that stays that way for 2 years, even if you do everything correctly from that point forward. So if you come to the end of a month or come to a situation where you can't make a full payment, you need to call up that financial institution, tell them what's going on, say, can we work out a payment plan? There are a lot of loan relief programs going on right now. There's mortgage forbearance, which doesn't mean you're skipping it. It means it's just added on to the end of your mortgage. There's loan relief for car loans. There's skip a pay for credit cards that, and we do all 3 here at the credit union, where you can defer a couple times during a year your payments. Now, granted, be aware that when you do that, you are incurring more interest on the back end. Okay, it's not like everything just stays the same. But the positive is that you are not being reported to the credit reporting agency as being delinquent. So either set up a payment where you can do a partial payment or a payment plan. And I always tell the story that one time, a long, long time ago, I made an error on my income taxes. I added wrong. And I got an envelope from the IRS and it said that I owed some money. And having small children at the time, I didn't exactly have an emergency fund. Again, like I said, a lot of mistakes made in my early life. But I had to call the IRS and say, can we work up a payment plan? I want to pay you back the money I owe you. And they set up a plan with me. Sometimes you have to have difficult conversation. If you ever need, how to structure that, please reach out to me because I work with people and tell them how they need to approach it. I've never had someone come back to me and say a financial institution has not been willing to work with me. Why? Because at the end of the day, the financial institution, whatever it is, want to get paid for the money they lent you. So again, that's important to pay your bills on time. The amount owed to your creditors is 30%. Going back to the previous example, if you had $10,000 available to you in credit cards, and that's what it refers to, and you charged it up to its max and used $10,000, your utilization rate is 100%. And that's going to have a negative impact on you. Ideally, and one of your later goals should be to try and pay your balances down below 25% of what's available to you. In that case, you want to have balances below $2,500, all right? That's A range. B range, C range is between 25 and 50%. That'd be $2,500 to $5,000. Anytime you get above 50% of what's available to you, creditors start to worry about your ability to pay them back. It's called debt to income ratio. And so that could be one of your intermediate or long-term SMART goals. For myself, I embarked on a plan and it took me 8 years to pay off my debt. It's important to understand that it's a long-term proposition. It's a long-term thing while still doing the other things in your life. But that's important to bring down your utilization. So if in fact something happens, life happens, air conditioning goes out, you need tires for your car, the water heater breaks, whatever, you have the ability to absorb that impact. And that's why you want to always bring that utilization down as best you can. All right. The other 3 factors, length of credit history. Someone like myself has a longer credit history than someone like my children who are in their 20s. It's just because I've had credit for a long, long time. And financial institutions pretty much know whether they can trust me or not. Because what is credit? Credit is trust. Financial institutions have given you money and they are trusting you to pay it back. And through my life, I have shown trust that I will pay them back. So therefore, my credit score goes up. I often refer to it to being like a parent. We trust our children until perhaps they do something that maybe does not allow for a bigger level of trust. And then what happens? We ground them, or we take their phone, or they have to be home at a certain time. Well, everyone has to be home at a certain time now. But point is that after that point, then they have to rebuild the trust with the parents. That's the same way with credit. If you do something like paying your bills late, your score drops, and then you have to rebuild that trust up over time. It's very important to make sure that you keep that trust. New credit. Here's the deal. Back in 2008, 2009, a big flaw that people made was that when that situation happened, they started opening a lot of new credit lines. They had 5 and 6 different credit cards. This one's going to be for the mortgage, and this one's going to be for the car loan, and this one's going to be for the utilities, and this one's going to be for the college payments. And the point is that completely freaks out the financial services industry. Why? Because then we're like, whoa, what's going on? If you ever notice when you apply for a car loan or a credit card or a mortgage, your score drops. Why? Because financial institutions hit the brakes and say, what's going on? Why do they need new credit? Eventually, after a month or so, your credit score returns to normal because they see that, oh, it's just normal life. Well, if you go and apply at 4 and 5 and 6 different places, which you should never do, it's going to freak out the industry because they're like, what just happened? Did they lose their job? Why do they need all these lines of credit? It will tank your score 50 points if you apply for 5 and 6 different credit cards. You do not want to do that. You want to go to Credit Card Tune-Up, pick the one best offer, and you apply for that one best offer. All right? If you need for a car, I always say if you need a car loan, I would go no more than 2 places, and the same with mortgage. Why? Because you don't need to go to, how my parents learned and what I did when I was getting credit coming out of college in a century long ago. I applied to like 5 and 6 different places. Well, that was a huge mistake now as I look back upon it. You just want to be very targeted when you apply for credit. All right? And the type of credit currently in use, is it a healthy mix? Someone like myself, I call it a trail mix: mortgage, car loan, credit cards. Someone who's just starting out, they may just have credit cards. So I have, again, more seasoning. So those are the 5 aspects. The great thing about Credit Karma and Savvy Money, finally about that point, is they will rate you in each of those 5 factors. You might have an A in payment history. You might have a B in amount owed to creditors. Oh, okay, so I need to improve my amount owed to creditors to boost my credit score. All right. One of the interesting tips that I want to bring up to you is that most people assume that on your credit report, it's going to have a balance of what you owe to them. And they assume that that balance is given to them after you make your payment each month. That's not the case. Let's say, for example, American Express, you have a payment on the 30th of the month. You pay on the 30th, but it doesn't immediately show up here in your credit report. Why? Well, the reason being is that they actually report your score to the credit reporting agencies 7 to 10 days before your bill is due on what your actual balance is, according to them. So if you owe $5,000 and you pay off $1,000, it's not going to reflect until the following month. For example, my brother couldn't understand why his credit score, they use their charge cards for everything to get rewards miles. He couldn't understand why his credit score was stuck in a certain place. They were charging $2,000 every month. They were paying it off, so their balance should have been zero. But the amount owed to creditors, his utilization, was negatively impacted. The minute he paid and contacted his creditor, and you can contact each of your creditors and ask them, when do you report to the credit reporting agencies? And they are obligated to tell you. So if you called American Express and said, when do you report? And they said the 21st of the month, you could jump ahead of when they report and therefore get the most benefit if perhaps you need to establish, like go for a car loan the next month or refinance your mortgage, your credit score would get a big boost, okay? Jump ahead of when they report to the credit reporting agencies. It's a little known trick. All right, so back to tracking your spending. Please track your spending over the next month. We just started a new month. You can do it through online banking, computer programs, there's receipt methods, there's envelope methods, there's checkbook ledger. I mean, I know Dave Ramsey is a great guru. He's very hardcore. I like to say, find what you're comfortable doing, okay? I found exactly the way I wanted to do it with all the best principles that I felt comfortable doing, and it worked for me. Do what works for you. What works for your neighbor may not work for you, which may not work for the neighbors on the other side. Find what works for you. And if you need help finding what works for you, let me know. There are mobile apps, and these are industry leaders like Manila, Expensify, and Quicken, Mint, and Credit Karma computer programs. Another thing I like to do, back to my notepad, is during the next month, put this next to your bed. Every night before you go to bed, I want you to write down what you spent that day. Gas, groceries, utilities, any bill, write it down, okay? As we start to want to support those restaurants who have been disaffected in the Athens and wherever you live communities, it could become a big spending leak because you're going to look at the end of the month and you're going to say, I had no idea I spent that about that. It's a good check just to make sure that you're keeping good principles. And if you say, oh my goodness, I spent $100 this month trying to eat out and support restaurants, it's killing my budget. Well, maybe in June you can say, I want to still do that, but maybe I need to cut that back to 70 or 60 and still support those restaurants, but do it to help fix your budget a little bit. All right? I always say to do that at least once a year. It's always a good check. Because why? Because we get our statements. E-statement is available from your financial institution. How many of us just click into the trash bucket without looking at it? Why? Because we just take these wonderful little pocket computers we have and we say, oh, I have money, okay? And then at the end of the month comes in and we're like, oh, I don't have enough money. Because we forget that what's in here right now is already divvied up, all right? So track your spending. We have to trim some spending leaks. And pardon me while I take a sip of water here. All right, these are the top 15 spending leaks. And feel free to take pictures of these and whatever. I always, I start at the bottom. Paying too much for auto insurance is one. Buying new instead of used is another. Shopping impulsively, we have a lot of free time at home. How many of us have shopping carts at Amazon.com where we put stuff in and then they email us back, hey, are you gonna come buy this stuff, or Walmart or whatever? Very easy to spend over your budget because we're bored, okay? Late night or Amazon or eBay are not your friends at the moment, okay? Stay on budget, stay on task. Collecting stuff you don't need. Paying unnecessary bank fees or out-of-network ATMs. I often get asked the question, what's the difference between a credit union and a bank? And up until 11 years ago, I never knew the difference either, yet I was coming to work with one. And the easy answer is we do exactly the same things. Credit unions do everything banks do, except for one important thing. We're not for profit. Now, granted, we're not for loss either, but all our accounts are free, no minimum balances, no monthly service charges. We do auto loans, mortgages, credit cards, everything a bank does we do, but we don't have shareholders. We don't have Wall Street. We have a free board of directors. Our board of directors does not get paid. So our whole thing is to give you banking services at minimal cost. So the other thing people don't realize is that, let's say you join Georgia United Credit Union. We are part of a credit union network that's all around the country. You join us, you can go to over 5,000 branches of other credit unions all around the country and where you live and do stuff free of charge into your home credit union account. You could go to Associated or Peach State or Delta Community or Georgia Zone, or you could be at Space Coast Credit Union in Orlando and do stuff into your Georgia United account. It's the second largest branch network in the country behind Wells Fargo, bigger than every other bank. It also have 100,000 free ATMs, which is more than Bank of America. That's the difference, okay? Eating out is a spending leak. Requesting faster shipping. I just did, there's a guy, Matt Brannon, he's the Daily Deal guy, and him and I have been emailing each other about something recently. Requesting faster shipping. On April 15th, you ever notice on Amazon, if you order something, it gives you a date and it always seems to come earlier? Well, on April 15th, I ordered something and it said it will come May 2nd. And it was basically some plant pots and some AA batteries because I didn't really want to go to a store yet. I wasn't comfortable to go to a store. It said May 2nd. But if you join Prime, you could get free shipping or expedited shipping for $9.99. Well, just understand, Prime and expedited shipping is a profit generator for Amazon. It is there to entice you, for you to get frustrated, to do those things to help profitize them. I appreciate what Amazon does, but you have to understand this. There's also a free option that said if you order it on April 15th, you will get it May 2nd. Amazingly, I received those ordered items on April 20th, way in advance of when they originally said. And if you think about it for a minute, it tends to always come sooner than what they originally tell you. Why? Because they want to push you toward those profit generators. All right, just be aware of that. Buying brand name products, sometimes we can do generics instead of brand name. I already talked about paying for cable, credit card debt. When things get back to normal, one of the biggest spending leaks people have is buying coffee. If you buy coffee, for $2, $2, $3 a day for an entire year, could be over $1,000. Number 3, grocery shopping without a list. Applies definitely when you go into the stores. I always say 2 things. Wednesday is a great day. Why? The circulars come out, make a list, and eat something before you go. Okay? Why? Because if you go hungry to a grocery store, bad things happen. Make a list. Now, chart out on your notepad. You're going to be using this notepad a lot. Chart out all your meals for the week. Then buy only to that list. What we went through this period of somewhat hoarding, but also overbuying because we just didn't know if we were going to get to grocery stores or whatever. Well, let's rein it in. Just buy for the next week, okay? You're going to have enough stuff. Buy to the week, order it, curbside pickup, which is what I do right now. I think down the road, I'll probably when I feel comfortable, go back into the stores, but just buy to the week, all right? Don't spend more than you have. So those are some of the spending leaks. I know we're coming up on time for questions. I want to caution you on a few things. Retirement loans. It's made available to you. If you want to borrow from your 401k or your 403bs, you can do that. But just understand that if you have no other options and have to go this route, let's say you take $1,000 out, you will incur somewhat of a 40% tax bite on the front end from the federal and state. So if you request $1,000, you may get only about $600 in a check. All right? Very big tax bite on the front end. And then when you have your taxes done at the end of this year, it will probably be another 10% tax bite on the back end. So ways you can pay off debt? Well, I talked to you about the 0% balance transfers like we had before. That's a way. You can also do things like, let me talk a little bit about title pawns. Title pawns are predatory. and dangerous. Why? I was reading a story in the New York Times recently about a woman in New York who took out a small business loan off her car, title pawn, $1,200. Her business went under as soon as the lockdown went in. She is paying 187% interest yearly. It is one of the most predatory lending things you can do. Financial institutions will do the same thing for you, take the equity out of your car, whether it's partial or full, and lend to your current credit score with the current rates. For example, if you have a paid off SUV that's worth $20,000 and you want to take that $20,000 and pay off your 15, 17, 20% credit cards that you've accumulated, you will get the credit card, or you will get the car loan rate of, let's say, anywhere from 2.5% right now up to 14% if you have the worst credit scores, and you will be saving money. So you can use the equity in your current vehicle to pay off your higher interest credit cards. So no one should ever go to title pawns. No one should ever go to title pawns. It's predatory, all right? If you have questions about that, let me know. Be aware, you're gonna see signs. Bad credit will help you fix your credit. The only thing credit repair clinics do is make the person who do it wealthier. What they do is they either wipe everything below your name, blank it out, which means you probably won't even get approved for the loan because financial institutions realize what's happened because it shows no credit history, or you'll see them on television. In debt, we'll negotiate for pennies on the dollar, all right? What they don't tell you is that they will tell you, let's say you have that $10,000 worth of debt. They'll say, here's the deal. Don't pay your bills for 3 months, and then we'll swoop in and we'll negotiate a settlement, and you'll have to pay them like $3,100 or $3,500 on the back end, or to us, who then holds the note. So what does that do? Basically, you have torpedoed your credit for the next 7 years of your life. You've cut off your left arm to save your right arm. Because by defaulting on that for over 90 days, you have effectively destroyed your credit score to the point where you will not get a loan. It's just like declaring bankruptcy. So be aware that credit repair clinics, especially those advertised on TV or in street signs, do only one thing, and that is either destroy your credit score or make the person who do it wealthy, right? There was a recent judgment on rent to own for overpaying. Be very aware of those places, pawn shops, high interest debt consolidation, and debt settlement, right? Finally, one of the things I'd like to share with you before we get to some questions, it's just something I developed myself, and I'm going to share with you. This is a methodology that I developed. It helps keep me straight. Remember how I was talking about how you get paid and then you forget about all the bills that are due later on that you have to then pay? Well, first of all, check with your financial institution. I know at Georgia United that, like I said, all our accounts are free. So what I do is I have my savings account, I have my checking account, and then I add in a bunch of additional savings accounts. And I name it like holiday fund, travel fund, repair bills, auto maintenance, emergency fund. I had a college fund, but my son just graduated from college last Saturday, the second of two. Thankfully, I am done with that. But then I also have my daughter's wedding fund that I call the in 20-year wedding fund or in 10-year wedding fund. And she says, Dad, I'm 27 years old. And I said, yeah, well, maybe by the time you're 37, I'll have enough to pay for your wedding. But all kidding aside is what I do when I get paid is I kind of know what my utility bills are on a monthly basis. So I take that money out of my checking account and move it to an additional savings account. I take the money out for my vacation fund, my emergency fund. I take all that money out so that only thing that's left in my checking account is what I can spend until the next time I get paid. Why do that? Because let's say, for example, you got paid, you have $750 in your checking account. You may not realize that 760 of it is already accounted for. And then you go and see something online or you're at the store or whatever, and then that's how you get to the end of the month and you don't see it. So as the bills come due, I go back into those additional savings accounts, I move it back to the checking account, and then I send it to the creditor. it helped keep me focused and aligned and helped keep me from overspending. I encourage you to think about that. You can name them whatever you want. Again, mine are all free, no minimum balance, no monthly service charges. Please check with your financial institution, whatever you have. Now, the point being is that I don't overspend that way, and it helps me, and it helps keep those other things that I'm saving for, like my travel fund, and if my air conditioning breaks, and my holiday fund. So when Christmas time comes, I have money saved for that, and then I have an emergency fund. So I encourage you to look at that. Now, I know I'm coming up against it. I want to answer some questions. I'm going to open the chat box here and see kind of what we have out here. Let's scroll up. Okay, Rick said that I found that if you keep your credit card balance under 30% of your available credit, that is true. It's 25. It could be 30, depending. Now there is an additional boost, very slight as is, once you get below 10%. But that is a great thing to do. It will definitely help you. All right, let me scroll up here. MoneyWise is a great Android app. That is true. It's basically a checkbook ledger for your phone. But sorting capabilities to see where your money goes. That's where, sorting where you go, because you want to know what it specifically goes to keep you on track. That's why tracking is so important. Oh, I changed that. Yes, Mark also mentioned one thing you need to do is make sure you pay your entire credit card balance a month. Otherwise, you're paying more than what you originally purchase price. The important thing is, our friends mean very well, but oftentimes in my seminars throughout the state, I heard from a friend, and usually it's, while our friends are well-intentioned, they may not be subject experts. So here's the thing. They think if you carry a balance that somehow keeps your credit score. The answer is false. They also say that if you have a balance of 0, you should close your credit card. Never, 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 never close a credit card. Why? Because that decreases your length of credit history and it brings down your utilization. For example, if you had 3 credit cards, $5,000, $5,000 balance, and 0 balance, and they all added up to $10,000, or let me rephrase. Three credit cards, total $10,000. You had $6,000 in balance, 3,000, 3,000, and 0. That means you'd have 6,000 and 10,000, all right? That means your utilization will be 60%, right? But if you close that 0 balance, you would actually have $6,000 balance with 67 available to you because you cut it by a third, which means your utilization will have skyrocketed from 60% to over 95%. So you never want to close it out for your utilization rate. I tend to, if I have a zero balance on any of my credit cards, I say use them twice a year, every 6 months. Give yourself a reminder. Use it at the gas station or the grocery store. Treat it like a credit, so when it hits, you pay it immediately. Why? Because if you don't, sometimes if you don't use something for a while, like Best Buy, they'll tell you, hey, we're going to close your credit card if you don't use it. So here's the thing. If you ever notice a creditor closes your card, call them and say, hey, I'm sorry, I just didn't need it. Would you please open it? Financial institutions want you to use their cards. They will open it again for you. All right? Want to make sure here. There's a UGA discount perk through the Verizon bill. Yes, take advantage of all your perks that are available as UGA employees. Bought a new car over a year ago and been getting notices to refinance. You can look at your current lender, but also I would use this opportunity to shop it somewhere else, because like I said, I'm just speaking here. It's a traditionally great time. I know our rates are as low as 2.49. So shop amongst them. Get the lowest rate possible. I will tell you this, if you go to another institution, have available to you your 10-day payoff letter from your current lender to give to the financial institution that you're shopping at. That will expedite the process. That kind of gives them a basis of the amount of money owed before they can give you a quote. All right. Please explain the difference between home equity line of credit and fixed rate home equity loan. All right. So a line of credit is basically unsecured debt. All right. Fixed rate home equity loan is there you are using collateral in your home against that debt. Okay. It's just like the difference between your home having collateral being the home and a credit card. All right. So the home equity line of credit is basically a credit card. All right. So better in my opinion, I think it's better in my opinion to stay with something that's collateralized, because that way you can refinance and take it and put it all back under the same mortgage. All right. And now is a great time if you have the ability to refinance your mortgage. Okay. 30-year fixed loans or even 15-year fixed loans. I know when I refinanced, I dropped a point of interest and went from a 30 to a 20 and dropped PMI based on the valuation of the home. So it's a good time to save yourself some money. If you have questions, we have a dedicated mortgage specialist right there in the Athens community. We can help you with that. Okay. Yep, you can try paying your balance weekly so that reported balance due is low. Yep, that's another trick you can do to help the reported balance. Please email me again if you have any questions. Yeah, don't discount the effect of credit inquiries on your credit. Constantly applying for credit in a relatively short amount of time will drive your score down. Had a story of this young man. He came in and applied. Well, he came and applied at the credit union, but he had applied at a dealership for a motorcycle. This is why you don't apply at a dealership for credit. Well, there's many reasons, and I could go off on that for a long, long time. But once you sign the paper, they can pull your credit whenever they want. They had pulled this young man's credit every week for 7 consecutive weeks, and you have legally given them the opportunity. Also, if you go to a dealership for financing, because let's say they say 0%, there'll be a lot of 0% financing around. Let's say you try and buy a car at 20%, $20,000 at 0% interest, or the $20,000 car with $3,000 cash back. You do that, you will be paying back at 0% interest $20,000. Okay? If you take the $3,000 cash back, your starting point is $17,000. If you get a 5% interest rate auto loan on a 4 or 5 year term, you'll only end up paying back somewhere around 18.1. So you see the disparity. 0% is not always your friend. It's just a way of tricking you into taking the higher option. Now, if you can get both 0% and the cash back, do it. But oftentimes by taking the cash back, it's a better deal than the 0%. But that came about in the mid-1970s when Lee Iacocca tried to get people to buy cars during one of the great big recessions of the Jimmy Carter presidency. All right, it brought people back to buying cars. All right, so please don't sign that paper. Also, if you go to a dealership, they are under no legal obligation to give you the lowest interest rate you're eligible for. You might be eligible for 2.5, 3.25, and 3.75. They will come out to you and give you the one that they would get the most money from the indirect lending agency for the dealership. They might say you're eligible for the 3.25 loan, whereas you are eligible for 2.5%, but they're under no legal obligation to tell you that you are eligible for that. It's just the way dealerships do business. You know, I have nothing against car dealerships, but that's the business model. They try and monetize and profitize the best way they can. Financial institutions, they tell you the rate up front, that's the way it is. And I'm going to scroll to the bottom. I know we're kind of coming toward like an hour. I want to make sure I don't leave anybody. Okay, I thought it only counts as one credit hit if you apply for multiple loans within a two-week period. Excellent point. Excellent point. But the point is that once you go over a couple, like if you go for mortgage shopping, for example, you go to 2 or 3 different places, you have a small window to apply for that. What you don't want to have happen is it being dragged out over a month. or 2 months, where you keep applying. So that was a good thought, Julie, right? If you transfer a credit card to 0 interest rate with no fees, doesn't affect your credit score. If you currently have the card, it will not impact your credit score because basically it's apples to apples. If you add a credit card and apply for new credit, yes, it will impact your credit score.
I can't.
Yes.
Ken, I'm sorry.
Go ahead.
So we're at 10, we're at 11 right now. Can you answer just one more for us? And then,
Sure, absolutely.
Yeah. Can you pick one more? And then what we'll do is we'll try to go back into the chat, get some of these questions. I'll send it to you. And if you have some time and can respond to them, just brief responses, we'll post it on the additional resources link on our connection site. So your pick, final words, final question.
All right, let me, there is a question about income tax preparation. And as you know, Georgia United partners with the College of Family and Consumer Sciences to sponsor the free income tax preparation. Unfortunately, because of the closing of UGA, the student workers have not been able to do tax preparations, nor do Dr. Palmer and the College of Family and Consumer Sciences have the ability to do that. There is a website, freeirs.gov, where you can go for free options available in the community to have income tax preparation. You now have to July 15th. If you need more information, please reach out to me on that. That's something very timely. I can do the other ones, but I know that we just had the wrap up last week and we saved over close to $1 million in tax preparation fees in the Athens community and virtually from people. And that's even without the final 3 weeks of the program. So please reach out to me with any questions. I want to help you as best I can. And thank you for the opportunity.
Ken, we're extremely grateful for the information, lots and lots of information. Folks, the link will be posted to the page. You can go back and review it. And if you have questions for Ken, in the link, you will also see, I think it was the second page, Ken, that you included your email.
Yes.
They can feel free to reach out to him and he'll point you in the direction of the other resources that they have at Georgia United that can help answer some of these questions for you. Again, thank you. We really appreciate it. Ken, thanks to you and Georgia United Credit Union. Thanks, Auxiliary family, for showing up. Thank you for showing some love to Ken. And we see you this afternoon at the 2 o'clock session. Thanks again. Goodbye.